Hi, and welcome to a new interview with Kalkyl. My name is Erik Lundberg, and with me today is Jan Storli Eriksen, CEO of Dellia Group. Welcome, Jan.
Thank you very much. Pleasure to be here.
Yeah. And first off, congratulations on a strong report with impressive growth. We will today do some Q&A session and talk a little bit more about Dellia Group. So let's start. You delivered year-on-year growth of 156%, and the company is clearly showing exceptional growth momentum here. Could you briefly walk us through what's driving the strong growth and what the key factors are that will enable you to sustain a high level of growth going forward?
Yeah. I can scroll back a little bit to my presentation, which I held on August 20. And we go up to this slide, scroll down to this slide here. There are four pillars, as I mentioned, that are very important for us to explain the growth. And first, we are focusing on taste. Taste is number one pillar we are standing on.
Yeah.
And when we have good taste on the product, we see that we can have products reach a lot of consumers, young and old, and all kinds of usage situations. People can use them for hiking, for snacking, for camping, for sport events, or just like a regular snack or a meal on the go. So I think taste has been very successful. We have had the product has been well received in the market, high frequency of purchases, and product loyalty. And then you ask the question, how can we sustain that going forward? And then we're looking on the other pillars where we are working on capacity and partnership. I think we are different than many other companies because we have a very strategic close cooperation with our main supplier, Kirirom, where we are developing capacity. We are using our office in Shanghai, contributing technology and equipment, and developing that factory. And of course, we have to stay ahead with constantly innovate, developing new products. And by having volume, innovation, and stick to our core mantra, which is taste and quality, we are working with good partnerships with the retailers. So that's how we are kind of the pillars we are standing on.
Yeah. And to what extent of the Q3 growth is from new listings versus throughput in existing customers?
Yeah, that's if you look back on the slide we did here on the revenue growth, the revenue growth came from higher rate of sales. Rate of sales is measured by consumer buying the product in the stores. You know, they are recognizing revenue when we are delivering the product to the grocery stores. But the underlying factor driving our long-term sales and long-term growth are when consumers go to the stores and repeat buying the product. And we saw that in all our products have high rate of sales, meaning that every store sold more units per week than the previous quarter. But we also added on some new stores. And in Denmark, we grew with new stores, and we grew with new stores in Sweden as well, and in Finland. So I think from quarter to quarter, we added on around 2,500 new stores. But that is a store growth of maybe around 20%. So it won't explain the increase in revenue unless we had an underlying high rate of sales. And we also launched a few new products in the quarter, which contributed to the increase in sales.
Well, interesting. And you noted in the report that the capacity constraint will ease going forward once the new production capacity comes online in early 2026. To what extent did the capacity limitation hold back sales here in Q3? Are you currently seeing demand exceeding your ability to supply?
Yeah. As a growth company, it's sometimes difficult to plan. So planning impacted us for periods being the out of stock of key items. Even our mango product, we're out of stock partially. But the main capacity for us is related to our new launch here. You see here our Dippis product, where we are working with dried fruit and the perfect taste balance between chocolate. And here we're using the real chocolate, and the most healthy part of chocolate is cacao. Here we're using 60% cacao, and it's also vegan. And this product line here was very popular. And it's handcrafted. We need equipment, we need people and workers. So we do not have enough capacity to supply in this product where we see a great demand. So that was impacting our capping our growth potential. And the same situation we have in Q4. But from January onwards, we will have more capacity, and you can see here how we have expanded the factory a lot since we started the cooperation with Kirirom in 2022, which is the original building, and how we now have expanded into more than 40,000 square meter this quarter, and we are further expanding with a new building here, and here we also are building a new building. And this is a joint cooperation between our 20 people in Shanghai, who has experience in building pharmaceutical factories and have worked with me for more than 20 years. It's the same team for 20 years. And we are now working together with Kirirom and their engineering team, expanding capability. And here we are building up now new capacity for Dippis. And we will have around 300 dedicated people working full time producing Dippis. And that will come into market from January, February, March onwards, probably with full effect from Q2 next year.
And you mentioned it's a long-term partnership with Kirirom, and one of your clearly a strength in maintaining a good taste and a high quality. But some people view it as a concentration risk. Can you elaborate why you choose to go so deep with a single supplier, and if you plan to diversify, or what's your strategy here?
That's been a very common topic, and I want to go back a little bit and talk about the first pillar, which you asked me previously, why have we experienced growth? And growth is coming from product loyalty, is coming from repeat purchasing of the product. And that is embedded in good taste. And then the question is, how do we create that taste? And how can we do that in a most optimal way? Shall we do it with many factories, with many partners? And what we have realized, and to be able to go in and build a new category, which we kind of are doing in grocery, building and the category we maybe call it for better choice snacking category. We can have many names, but let's say a better choice snacking category. We need to make sure that we can be long term in shaping and rebuilding that category, and then we have to be absolutely sure that we can deliver the taste and the quality every time. And our experience is, with all the trades-off by having a lot of partners or one partner, to do that, we have found the perfect partnership with Kirirom, where we can go in together. And Dalis, who owns the factory, and us, we made that strategy together in 2022 to create our ambition of making the world biggest better choice snacking company, and make Kirirom a snacking factory and we are a snacking brand, competing with or giving the consumer an option to choose among chocolate, potato chips, or sweets. We need to focus on taste, and it's starting with the mango, who's a very important base. We're using it with mango chocolate, we're using it with mango with flavor, we're using it as a dried mango, and our aim is that our dried mango shall taste like fresh mango. And to do so, we need a lot of planning, and we are planning long term ahead, so we can secure contract farming, where the farmer itself has a very stable, good income source. He can invest in his farm, for example, with planting new trees, with water supply to prevent the climate changes, and keep the fruit on the tree long enough to become ripe. And all this is very, very hard and complex to do with a lot of partners. And furthermore, you can see how we have been expanding the factory and tailor-made our supply chain.
Yeah.
The snacking market is 66 billion. We're going into making a new category. We need fruit. We need the right quality of fruit. We need equipment and engineering. We need to lift all this together so we can reshape and be that partner for retailer. And here we have, and that's what we have decided to do with one partner rather than having a lot of partners.
Yeah. Yeah, it's an important step to have a good supply chain in your product to maintain that high quality. So, yeah, it's your strategy is to go deep with Kirirom.
Yeah. And we create a win-win cooperation.
Yeah.
You can say, of course, you have contracts, you have paper together, you have we have written about that before. We have a right of first refusal. We have exclusivity for Europe. But the most important thing for Dalis and for us is that we have created a win-win cooperation based on trust, and it's financially rewarding for the farmer. It's financially rewarding for the factory and for our brand, and we have a holistic value chain, and lifting it together, and together reshaping a better choice snacking category. Being a fruit company, where we're using fruit as ingredient to create indulgements. Yeah.
And talking about a little bit more about sales, we have talked. We are in the Q4 now. Are there any seasonal variations in sales investors should be aware of?
Yeah, it's. I can mention a little bit about that as well. Our company has a policy of not providing guidance on numbers forward, but we are giving an outlook on the market, and we see a very good momentum. We see a very, very positive outlook for our drive on growth based on the market data that we're getting from Nielsen IQ, what we're seeing, consumers, product loyalty, frequency of purchasing, and so on. But during Christmas, we have not developed a Christmas product segment. So we intend to have lower sales around Christmas time. We'll see how it goes this year. And then we have a higher sales again in January. So when we are making our Q4 report, we will also make a trading update on the sales in January and February. So the investors can see how Q4 is, how January and February sales will be, because we are publishing our Q4 report end of I think it's 20th of February. Yeah. And then you also have the sales figures for January and February. So then we can give a trading update on actual sales we have done these 2 first months of the year of 2026, and see that in light of if that has impacted by less sales in December, more sales in January. Yeah. It's a little bit hard to say, but we are planning for having Christmas products next Christmas. Our company are growing. We can't do everything at the same time.
Yeah, of course. And maybe we in Sweden and you in Norway will. It's kind of perfect the Christmas snacks as well. The dip is, I think, with the chocolate and fruit. So maybe.
Yeah, and also we are working on relaunching. We haven't succeeded though with our date product. Yeah. Frankly speaking, so we're going back to the core here as well, and asking ourselves why we haven't succeeded, and we have to go back to the mantra on the core of the product. It's about taste and quality. It is about traceability to the farm. It's about securing the most delightful raw material, which tastes really good. And if we can do that, we are now also developed, as I mentioned in my presentation, we have developed here in Kirirom also now a new production line for pitting dates, removing the stone, so you can work with farmers directly and buy dates with stone, take out the stone here in the factory, in our SEDEX SMETA approved facility, as well as coating and making flavor on dates. We also will have our flavor date facility here, and there's a lot of opportunity we can use with dates also for Christmas.
Yeah, and in the report you mentioned the plan to merge Dippis and a date with under the new umbrella brand Sunshine Delights. which is your strong brand in the dried mango and dried fruit section. Could you just elaborate on the rationale behind this move and what you aim to achieve here with the unified brand?
Yeah, we have seen a lot of product recognition. People know our product in the market, but they mainly know our product with Sunshine Delight. Yeah. So, and this is new launch product, and we are building the company in phases. First, it was about setting up supply chain. It was about getting distribution. It was about getting good placing in stores, more like a push strategy. Yeah. As our company are evolving, we also see much more importance going forward to explain to the market and consumers what we really do. I think what we really do is unique by working with contract farming, with production facility with Kirirom, the love and the care we are putting into the product. Yeah. And then we want to communicate that through one brand. So we will take Sunshine Delight on all the products. Yeah. Here we will have Sunshine Delight on these products when we are relaunching it with the new flavor dates. We will have Sunshine Delight on the Dippis range. We will keep expanding the Dippis range, which has great potential with chocolate and fruit. And then we can connect the taste and the quality directly with Sunshine Delight for all our products. It makes it much more efficient from a brand building point of view.
Sounds good. And if we're going to talk a little bit about the gross margins, they improved in Q3 here, and from roughly 34% last year to 35.7% this quarter. I believe increased volumes and scale are likely key drivers behind this, but were there any additional factors that contributed to this good margin development?
Yeah, you can scroll down to financial slide. I think we have it a little bit further down. Yeah, here you can see our gross margin improving from 34% to 36% for the quarter. This was mainly logistics and freight is a cost for quite a large part of the cost for the company. We are transporting a lot of volume to many locations in almost 11 countries. And occasionally we also have had air freight, which can impact the gross margin. But here we have been working a lot on improving number of bags per display, number of display per pallet, and then more units per container. So we could reduce the number of container transporting our product. And that was part of the ongoing environmental focus that our company do. We're trying to focus on optimizing the value chain. And that helped us to improve the gross margin this quarter.
Yeah. And what are the main levers for further gross margin expansion going forward, and what level of gross margin do you see as achievable over time?
I believe that we are on a healthy gross margin level. We have not increased our prices in 3 years to retailers. We have maintained our price stable. Which has been very important. We have worked on improving our gross margin by scale in packaging, printing, and foil printing, in transport, how we move the product, optimize logistics. We're looking at where we're having our warehouses and so on. I think we have taken out. I feel we have a very healthy gross margin. There's not any immediate thing that I can think about today that we should do to further improve that. We don't want to increase our prices. However, we have done a lot of optimization for logistics. And I hope we can maintain this gross margin going forward. Of course, we also are exposed to freight rates, as I wrote about in the quarterly report. We're also exposed to some kind of currency, which can be US dollar. But since we now are selling in a basket of currencies, we are selling in NOK, DKK, SEK, Euro, in pound. So we have a basket of income in many currencies, but we're also exposed to dollar, of course, and freight rates. I don't have a better answer on.
Yeah, it's great, and now it's a healthy gross margin, and now we want to increase sales and scale on this healthy gross margin.
Yeah, I think the most important for the company, and that's the key thing here for us, is scalability.
Yeah.
You know, if you look on the product we are selling, we have products which are having 12 languages on the bag. It is one product. It is a quite international taste. Yeah. We're not selling. It's an international. Mango is an international taste, for example. Chocolate is an international taste. Yeah. Dates, in many ways, is international taste. So we are having scalable products. We have a healthy gross margin, and the key for us now is to build volume and scale volume, while we also control our operational expenses. Yeah. Which is not that easy after just going public to an IPO, because there's a lot of new things that you have to learn how to do, both before the IPO and also right after the IPO. But control our operating expenses as good as we can. Take all core operations in house and scale volume with the products, and take out more of the potential in the Nordic. Grow the DPs. Look on Europe, and also we are having plans, as we mentioned in the quarterly report, for China, where we're planning to open our Tmall flagship store, leveraging our Nordic brand. So first, now we are going to rebrand everybody to Sunshine Delight, and then we can have our Sunshine Delight flagship store towards Chinese consumers. And we are, as I mentioned, also setting up an office in Portugal, where we will have developing our sales we are doing there with a retailer, and we have Portuguese and Spanish on the pack, right? And then suddenly you can also have Latin America as a market. So it's, you know, the international appeal is there, but we have to go back and look on our pillars: taste and quality, capacity and farming, and in partnership with Dallas and Kirirom, lifting the capacity and the production, and at the same time selling the products. First, no volume for Nordic, but our ambition, as I wrote in the CEO letter, is to make a global company and a global brand.
Yeah, and as you say, it's a global taste profile here with dried fruit and chocolate. Everybody likes it, so yeah. And if we talk a little bit about the European markets, the European gross margins were close to zero in Q3. Is this a deliberate strategy to accelerate listings and gain traction with key retailers, or what's your view on that?
Yeah, if we're looking on the report here, right? Scrolling down to we are just explain a little about the report structure that we have made here now with this quarterly report, and the structure will be the same going forward. It's important for our investors to follow the company on the same performance parameters every quarter. So we will disclose the same information for Q4 and Q1 and Q2 next year, and keep on going, so they can traction our sales. And you have revenue by operating segment. We are looking at every country as an operating segment. We are looking on sales and profit. And you mentioned Pan Europe. We had 10 million in sales, but this is the first time we have sales outside the Nordic. But here we're grouping by reporting segments, and the reason why we're doing reporting segments means we have aggregated different countries to reporting segment. And Pan Europe is one, Nordics is one. Nordics, obviously, because it's our whole market. We are making money, make it easier for the investor to see how are we doing in the Nordic. How can we capture the potential in the Nordic? How are we facing Nordic, the market here, and how are we going to do it in Europe? And we haven't had much EBIT contribution from Europe. We lost money in Europe, both on the gross margin and EBIT. And that relates a lot to doing so small volume of sales in quite many places in Europe. meaning a lot of transportation and warehousing. And transportation is a high cost for the company. And we haven't had an optimized logistics for Europe, as an example, which relates to the gross margin question. And also, as I mentioned in the quarterly report, we have had some change in management in Europe. We have a back and forward finding out how we can build the market. And also finding the right product mix in Europe, and which products are selling well in France, in Germany, in UK, in Italy, and in Portugal, for example. It may not be all the product being popular all over the places, right? So we have to find the right product mix in every country and optimize logistics, and that's an effort we are working on. And but we see good traction in Europe, particularly with Morrisons. We had very good traction. We see it with a lot of flagship stores, both in Italy, Portugal, and Spain. We are doing trials in Germany with large retailers. So we are working a lot of fragmented testing and trying, and taking some of the EBIT from Nordics and investing it in market development in Europe, while we are focusing on getting capacity up and delivering the volume to the Nordic, but building the base and the pathway for a growth in Europe. So we have to we are doing everything at the same time.
And we talked a little about the operational expenses, and how well is the current organization positioned to support growth, both the rapid growth in the Nordics and the planned European expansions? In which area do you see you need additional hiring maybe going forward?
This is our year-to-date sales, and when it comes to employee benefits, we have today around 35 people in the company, and we have built up that organization over almost a couple of years. And half of the organization is based in Shanghai. You know, I lived in China for 16 years. I built 2 factories in China within pharmaceutical and production of dietary food supplements and food nutritions. And my team that I used to work with in China are now working with us in our new Shanghai office, which has been the base of having that team available there in the supply chain. And that organization now is built, and half the team is based in China, because supply chain is so important for us in terms of the focus on the contract farming, developing the factory. You know, China is supplying all the equipment, for example, chocolate equipment to the factory, equipment for pitting dates, coating dates. We're all getting from Chinese suppliers into the factory, and our engineering team working together. And I think that we have a very good rig now in China for running supply chain. We also built the team of professional people who has good retail experience, developing market together with us in many countries. I think we have established the rig pretty good now for a number of people that we need to keep growing and develop. But we will do some further hiring as well when it comes to e-commerce in China. We are recruiting now in-house sales director for Portugal, maybe Spain, potential for export also to Brazil. So we are doing some kind of recruitment in sales area still, but I think we have done a lot of big step forward. And we also we strengthened the company this year, as I wrote in the report, with a new marketing director. We have developed a product development, a chef working in Oslo. We did a lot of recruitment over the last 2 years to come and build where we are right now.
And it's naturally in your growth journey going forward, you need to invest some in people.
And that's the kind of the balance here. You have to kind of control operational expenses and scaling volume more. So we have to we try to grow our operational expense in a slower pace than we are scaling volume, so we can convert a healthy growth and make money while you're growing, which is not guaranteed, right? It's kind of a difficult balance to both grow the sales, scale volume, have with you our capacity, deliver on taste and quality, have the team in China built up, working with batch release by Eurofins and testing, working with getting all this strong team we have with us of building retail sales in so many countries. It has been a lot of jungle with a lot of different things that we have to get right to both grow and hopefully also now planned paying dividends, right? We have an ambition to pay dividends. We have an ambition to reinvest in growth and both grow and pay dividends simultaneously. That has been in the vision of the company, and that is really good. That 40% of the shares today is owned by our employees. So this is a company. We are building this company for investors, but we're also building it together for investors. So we are together with the investors building this company.
Kind of a family company.
We are a family employee-based company. We're not a family company. No, we are an employee-based company.
And we have to talk a little about the markets as well. Sweden is your largest market now, and Norway second, and both markets showing strong growth. How do you view the competitive landscape here in Sweden and also in Norway?
I mean, when you look on the competitive landscape, that is, I want to go back and basically look on the slide here. And we are in the business of we are a fruit company using fruit as an ingredient, and our main focus for the company is to deliver a taste experience. And we did some research in 2022 where we see that people are, we asked people the question we used a company called Norstat to make a research in 2022, and we asked them, if you were to eat more dried fruit, which product would you buy less of? And the answer was chocolate, potato chips, and sweet. And we can also see that recent research is that we are pulling a lot of volume from the snack category. We also see it from a lot of stores, that Dellia products are often among the top 10 in the snack category in grocery retail stores. So when you look on a competitive landscape here, it is, we are providing a taste experience and indulgement. We are focusing on where we can make an impact, and that is by making a unique supply chain, which then giving our company what we are looking at as a sustainable competitive advantage. And by doing so, we are going in and reshaping a new grocery category within Better Choice Snacking under our unified brand umbrella Sunshine Delight. And our competition then will be a large variety of products, everything from chocolate bars to potato chips to sweets, and stepping into a category of the snacking market and trying to take some percentage share of this massive 66 billion Nordic confectionery and snack market. And in that market, it's all about giving the consumer an option to choose something else and connect our brand, that when he chooses our brand, that is giving him that taste experience, that indulgence, that actually he can choose and he feel well about taking and eating, comparing to a lot of other products in the market. And in that market segment, there's a lot of products today, and we want to shape and reshape a category. And we're not looking and focusing on competitors in that way. We are just focusing on how we as a company can be perfect on taste and indulgence and quality, and embedding that in supply chain partnership. And by doing that, product consumer focus, that is where we are keeping our attention.
And your biggest competitive advantage is the high quality and taste, I think.
Yeah, that's everything's about taste. And when you look at consumer survey, right, the parameter scoring there is taste. You have to score on taste, and quality is by definition. You have to be on quality, right? And I think we're doing pretty good in terms of market share. We are growing the market share in both Sweden and Norway. We will have data here now for next quarter for Sweden and for Finland and Denmark as well. So, and we will have the same slide when we're presenting Q4 and Q1 and so on. So the investors can follow our market share development. They can follow our rate of sales, how many units we are selling out of certain stores per quarter, per year, and track it. And this is the underlying factor. We will also show them how we are driving and developing the categories and so on. So the same parameters that we as a company every day try to improve, we will share them with the investors, and they can track us every year. And by doing so, they can learn to know our company.
Yeah, I really like that as an analyst and an investor, that you can track over time the same data and see how the progression is. So great. And but do you have seen any pressure in price due to competition or within dried fruit, or are you expecting any pressure in price going forward here when new companies want to maybe take a share of the market?
Yeah, we haven't changed our pricing to retailers for the last 3 years, and in a market there will be more expensive product, a little bit cheaper product. I think that we are in most markets, we have very competitive pricing in my view. Of course, there are companies trying to sell low priced and cheaper products. We also have low price product range, which is not showed here. We have when we are producing the mango, for example, right? We are here on the tree.
The soft and chewy.
Yeah, we have a soft and chewy brand because we are, first of all, our philosophy as a company is have zero waste, right? So we are working a lot on that. So when the factory, for example, taking away the skin on the mango, and you have the kernel, the stone, all that is used for neither compost, which can go into natural fertilizer, or is used for animal food. So we have no waste on that. But we also, when we are making the mango, right, we are cutting the mango in pieces like this. And here we have big juicy slices. But you will have some part of the mango which has a lot of fiber. And some part of the mango might be too soft. And that is not going to our premium selection. We use that in our soft and chewy, and we call it saved for your delight. It's also a very tasty part of the product, but it might be softer, it might be chewy, so we call it soft and chewy. And that's a very, very low price product, because we actually have it as a waste product, and that we can use as a price fighter. And in the market now, we are seeing that if the retailer would like to have like a very low price discount product, that can be one way of us also offering that price range with a very low price product, where we can be unbeatable on price, but we still want to maintain our premium quality, where we are, we are paying 30-40% premium for fruit price with contract farming to make farming sustainable. We are investing in sustainable farming. We are investing in building a factory and development together with here. We also have capital commitment, in terms of letter of credits, in terms of bank guarantees, and sometimes we are buying equipment as a company and delivering to the factory to support the growth faster, to also support their working capital, and then we deduct it back from the price over time, and they're shipping our product to us. So this is a symbiotic relationship, and we are investing. So for our premium selection, we feel that we have the right pricing, but for the market need for having maybe a very low price product for maybe 10 kroner or 15 kroner or something, we can use soft and chewy. Currently, we are selling that mainly in discount chains across Europe, but we are also now starting launching it in more ordinary chains as well, because we see a demand there for having a low price product.
Yeah, yeah. For being as you call it, a waste product, it's a very good product.
Yeah, it's a very good product because part of the mango, is which issue it tastes really good.
Yeah.
But our philosophy here, for we want to make our sun-ripe mango dry to perfection, taste like fresh fruit.
Yeah.
And it should be nice, juicy slices, but we have the soft and chewy then with the fibers, or maybe some people too soft or too chewy.
Yeah.
Here we have our, dippies, where we are trying to make the perfect taste balance between chocolate and fruit.
Yeah.
And real chocolate, 60% cacao. And we have spent a lot of time to select the right chocolate that pair with the fruit. So that's why we have a chef, in Oslo here, right, working with us. We have a nutritional, a full-time chef. Yeah. Used to work in Michelin stars, now working with us in handcrafting, developing innovation that we can bring to the market and keep providing indulgements.
Yeah, and as you show here, it's not just chocolate, you have the fruit fusion and the products as well.
Yeah, this is the range that we launched this quarter, which we have worked with Sven and developed. And this is Sven, our chef. And example here we have a mango where we are mixing with natural freeze-dried strawberry powder, which is appealing to a lot of people, and sour lemon. We have a spicy ginger, and here we are developing a lot of new products. And we're getting listing of new products here now in the first quarter. Yeah. We're launching a lot of new fruit versions, very, very cool, exciting flavors coming into the market now in the first quarter.
Oh, exciting! Yeah. The strawberry one is really great, I think.
Yeah, that's been a good hit in the market as well. Yeah.
And as I understand it, private label has a limited presence in the premium segment of dried fruit, and I think it may be challenging for private label to compete on quality and taste here. But how do you view the competitive threat from private label going forward? Is that a factor, or are the
I know that people talking about private label. I think that when you are, not only for us, but a lot of companies also in Sweden have been very good, or companies has been, entrepreneurs has to kind of come in, right, to make innovation. I think that to make innovation like we are doing now, we are putting a lot of love and care into this. We are traveling all over the world looking for the best ingredients in the world. We are setting up a partnership with factory. We are tailor making chocolate lines. We are creating work for, since we started the cooperation now with all this, you can see how we developed a company from this building. That's just a building. You see, we built all this. Now we're building here and building here. We're building up to 50,000 square meter. Currently more than 3,000 employees. During harvest, 600 year round. But now we're adding on 300 new workers and training 300 new workers for just working on dippies, making it up to almost 900 people working year round. So we're making all this kind of effort here, working with contract farming, understanding how we have to work with farmers to overpay, to make them want to keep the fruit on the tree longer, to trust you to buy the fruit when it becomes ripe, rather than sell it like unripe for a lower price. It's a lot of work we're doing here, which is, I don't think is really private label business. No. I don't think private label are innovating, putting love and care in that way as we do. I think private label is more something they do when thing is more generic. And I think in snacking market in general, though, when you're working with indulgement, I think private label is not as large in that area as they are maybe in frozen food or in shampoo or but there's a lot of private label in dried fruit as well. But I don't think that what we are doing is private label focus. For example, here with our dippies line, I don't see a private label going in and doing that. And private label also must be about making money, right, for the store, right? I think private label is a policy for the store to increase margin maybe. But what we are doing here for the stores, we are making a very profitable square meter in the store, combining with constantly fast innovative speed. Plus, we are driving a lot of traffic by marketing and as well. So I think that the partnership that we have now developed with retailers are very profitable for the retailer. It's profitable for the brand. It's profitable for the factory. And overall, we get the holistic view, getting the farmer on board into the whole value chain. And this is a very, very beautiful thing to do.
Yeah, classic win, 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 win for the consumer.
Win consumers, right? And of course, we have contracts and agreements, but the fundamental for the business is having that win-win cooperation from the start to the end.
Yeah, and as you said, the quality of the mango is very important too, where it grows, what type of mango it is, and I think many private label now is sourcing from Spain, I think, and different species. So I think it's going to be hard for private label.
When we started in the market with mango, I think the dominant supply was from Africa, and I think in Europe, when we go into Europe market now, we can see that African mango suppliers are very dominating in Europe. But that's a kind of a different taste and flavor profile. And very interesting is that if you look on private label for grocery stores, I think that they are still selling a lot of their private label product they had before we entered in. I think the fact that we went in with our, for example, dried mango, did not necessarily reduce the private label sales of the product. I think we went in here, and I think what we really did was going into the category of actually pulling volume from snacking. And basically enlarge the market. You can see here, for example, after we went in, this is all the dried fruit and dates. This, of course, also include private label, right? In Norway, 298 million. It's a kind of more narrow category. As in Sweden, the category is, let's look on Sweden because now we are in Sweden. The dried fruit category in Sweden was 706 million. This, of course, includes private label. Then Dellia going in there, right? Are we taking market share from private label? No, we are not. We are enlarging the category up to 882 million, representing 70% of the growth in the category. So private label is still there, making a lot of money, but we went in, you might say, also low interest category.
Before you came, it was like raisins and
low interest category, private label dominant. Private label had maybe a very large share of the category. Then we enlarged the category. The private label share in percentage probably making it smaller, but the private label in terms of numeric volume probably remain the same as before. So they're still having the private label business running very good, but we enlarged the category. And I think that we're taking the category beyond the dried fruit category. And that is something require a lot of love and care and a lot of hard work, you know, to shape a category, reshape a grocery category, and do it in a way where you have a holistic view, where a lot of components like farmer, factory, equipment, office in China, you know, salespeople in Europe, in Nordic, and then achieving that. And the most beautiful thing is that if you're looking at what we're doing here is, you know, consumer, you know, buying the product more and more. In third quarter, in only Coop, Norgesgruppen, Rema 1000, and ICA and Axfood, in these 5 grocery stores, and then Coop in both countries, selling 3.2 million units. 3.2 million units out of the stores versus 1.6 million. You know, that shows that consumer are repeat buying the product. And and why they're buying it again and again? Most because they love the taste, they feel good when they eat the product, and that again is making a very profitable square meter for the retailer. contributing to what existing private label business they had. So I don't see a conflict between private label and innovation. I think grocery market must be developed by entrepreneurs. If you don't have entrepreneurs, it wouldn't be that innovation.
No, completely agree. And you can coexist on the market as well.
But it's very, very important though, as an entrepreneur, when you're building a new grocery category, if you just did that by going to an exhibition, finding a product, I buy it, I make a design and I sell it. What is the value you're creating? You know? So by being an entrepreneur, you have to also figure out how do you make a sustainable competitive advantage in that value chain. It's not only about selling something or finding something or selling it cheap. It is really about making a unique value chain where you actually are doing something much bigger. And in our case, what we really are doing, and what I'm really proud of doing, is industrial development. And this is embedded in our history as a company. We built factories in China. Previously, we worked with renting factories. This was in production of food supplement. Now we are having the same team coming back again. Dellia is a third company I'm building. I built 2 companies previously. I sold 2 companies previously. Dellia is a third company I'm building. And again, fundamentally doing industrial development, creating work. You know, here there was also workers, a lot of people, but now 3,000 people. New chocolate line, 300 year-round workers, you know, doing this industrial development, and then succeeding by consumer loving it. This means a lot to us and all the people, 35 people working in Dellia, hard every day.
And we have to talk a little bit about Europe as well, because the European markets is a very interesting growth opportunity for you. And how can you talk a little bit about your go-to-market model in Europe? Is it largely mirroring the Nordic approach, or are you adjusting something, or how is the go-to-market strategy here?
The strategy in Europe has been very similar the strategy we have in the Nordics. It's about first getting into certain stores and showing that you have good rate of sales. And when you develop that proof of concept in that store, the store then will talk to the regional buyers, for example, and then you can get a regional listing. And in many stores in Europe, you might start with 100 stores, or maybe 400 stores, or 300 stores, and you do a test. And as long as the rate of sales remains good, the consumer like the product, then you will keep getting more listings. And in Morrisons now, we started in January. We had a very, very good increase of rate of sales, getting up to numbers per week, or maybe more than 8-10 units per week, and by just being in a shelf, you know, maybe behind here. And now we are working, of course, if we can, for example, do some tests with certain stores where we have better retail placings. We can show for Morrisons that we are selling more, and here we can maybe increase turn rate of sales a lot. And then we have to convince them that they should do this more in their stores, and that's some negotiation we have ongoing. If we do that, we can turn Morrison into a flagship store, really proving in UK the Scandic model, and how we have succeeded developing a new grocery category, because that is not going on in Europe today. In Europe, the market is private label. It has been. Of course, you have dry fruit suppliers like Seberger and other companies, but it's very much private label dominant in Europe, like it was in the Nordics. We are trying to bring the same innovation into Europe by convincing on the rate of sales. It's all about consumer loyalty and consumer loving the product and frequency of purchase. When you get that right, the rest will fall into place.
So,
but it's costly though. I mean, we are losing money on on the pan-European side now.
Yeah. But it's you can see it as an investment for the future.
Yeah.
Not just a cost or a loss. So, you said that the competitive landscape in Europe is quite different than the Nordics. Is much private label and or how do you view the competitive landscape in Europe? Is it any competition to like Dippis, or are you quite unique there?
Now on Dippis, on the Dippis product line, I think that our company are very much in the blue ocean territory. Yeah. On the mango, you have a lot of dried mango. You have from a lot of suppliers of that, but I still mean and believe in my heart that our dried mango is unique in terms of how we work with the ripe fruit and the taste profile and the farmer, and how we make it like a perfectly balance between sweet, sour, aromatic fruit taste, in the right texture. I believe we have also. I believe, of course, I'm biased here, but I believe also the blue ocean for us. But in Dippis, obviously, it's blue ocean. In dates market, it has been a lot of companies, but we want to go back into that market. We failed at the first launch. Everyone are using the Iranian side dates. We have to kind of go out of the box. Everybody using those dates. We have to come up with a new date. We have to go up with a new flavor, and we have to go back to our core, how we work with sourcing dates from farms. We know how we're building our own supply chain in a GMP, good manufacturing practice environment where we have SEDEX, where we have SMETA, where we have BRC, where we have quality control, where we have laboratories, Eurofins release and all that, and go back and conquer on taste and quality. And that's something we will do. That is also kind of blue ocean territory in Europe. I've seen Humble Group has spoke about their international expansions in Europe, but I think that is a blue ocean territory. I believe Dippis is blue ocean territory. I also believe our mango is unique with flavor profiling. So even you have a lot of mango companies selling mango, but you know, I see Europe as an important growth area, but I think China can be an important growth area.
Yeah.
You know,
market.
As I mentioned in my CEO letter, Nordic is now our home base. That's why we have Nordic as a segment. We have Pan-Europe as a segment. We have Asia as a segment. And I think that our aim is to try to make a global company. That's a target. That's our ambition.
Which products are you prioritizing in the rollout? Is it Dippis in Europe, or is it?
Yeah, in Europe, we are trying to. In Europe, we are going in with fruit fusions. We're going in with our mango. We are also going in with our Dippis, because this is kind of products where we are coming in with very new innovation as well. It helps us to establish ourselves with innovation, and we also will, when we get the date concept right, we will go in with that. And to simplify logistics, in this facility here, we are doing our mango. We're doing mango with flavor. We're doing chocolate mango dipped. You know, it's very logical because here we have all the mango farming, right? So we're taking the mango into the factory and producing the real product, all the products close to source of fruit, saving logistics, saving environmental and being close to control of quality. But here we also bring in our dates. Unfortunately, we are buying dates from farmers. They don't have any manufacturing facilities close to them. So we're taking all the dates into our factory here. And then we are making also the dates here, like a singular product, like a single pack, which can be excellent for Christmas, for example. We are making dates for flavors, which we will relaunch. And then we can share logistics here from mango flavored, dates flavored, mango chocolates. We have a lot of products coming out from one site. And that enable our logistics. As you mentioned, why our gross margin is weak in Europe. We had too many SKUs in Europe from too many factories, costing too much trucking and container and warehouse cost. So we want to simplify our operation in Europe around one factory and shared containers into one warehouse with both, and then build proof of concepts from stores to regional to central listings.
Yeah. And as volume scale outside of the Nordics, what do you see as the most important operational constraint now to address to support continued European growth? Do you see any constraints going forward?
Yeah, first constraint in Europe is, of course, you have to kind of get better placements in the store we are in. I mean, proof of concept have to lead to more listings. It has to lead to more regional listings, right? So the first constraint will be winning deals, right? Once you're winning those deals, you have to have the capacity to scale up with a partnership. And if you win deals with every retailer in Europe at the same time, that won't work. Then you know we can't do that. But so we are actually now betting on many horses, you can say. We're trying France, we're trying Portugal, we're trying Italy, we're trying UK, we're trying Germany, right? And it is not likely you will succeed full pot, you know, full score simultaneously everywhere. But you might succeed one place, and then you have capacity to take that. Then you might succeed a second place. Then you have capacity to take that. So our strategy in Europe has been to go abroad, tip to toe in many markets, work on proof of concepts. But of course, it's been a little bit sacrificed by doing so with some volume, which we actually should have delivered to Nordics. But we are now getting capacity up and going. So Nordic is priority. We have to supply Nordic first while we are doing these test launches in Europe. But the volume we have shipped in for test launching is pretty small. And then once we are building the more and more factory capacity here together with Kirirom, we hopefully have then the volume for Nordic as well as succeeding certain places over time. But I don't think we will succeed everywhere simultaneously. And that's also good because it wouldn't be possible. You know, we can't take the whole world in 1 year.
No, it's quite hard to supply that. We talked a little about the product pipeline already, but again, what does your product pipeline look like for 2026? Is it more about existing categories, or are there some exciting new categories as well?
Yeah, during 2026, if we go back on the front page.
We talked some about the relaunch, about dates, and maybe some Christmas products and new fruit fusions, I think.
Yeah, the most important part for us for 2026 is obviously our deepest range with chocolate. Chocolate is very popular, and we believe going in with a chocolate which is 60% cacao, the fruity good taste of the chocolate, all the flavors of the chocolate in a perfect balance with dried fruit, and a vegan chocolate as well is vegan, and it's 60% cacao. We believe that this is an untapped massive potential in actually going into the confectionery and snack market. And we believe that product can be a real good challenger to best-selling chocolate products today. First of all, because also it's vegan. It tastes good. It's 60% cacao, and it also contains fruit, where you also will have with you a lot of the taste of the fruit together with the chocolate. And we believe that can be a big hit. So this is what we really are working on. But that relates to these 300 people and all the lines we are building now, right, which is coming into place during November, December, and January, February. And will ease capacity from January onwards. So we won't see much effect on this in Q4. We will see effect on this in Q1, right? Which also might be reflected now in some analysts predicting higher growth revenue for us in 26 because we're getting in with more potential of this. And of course, we want to expand with some fruit fusions. We are working on that. And we are working, and Sven now is working a lot on our dates concept for improvement and relaunch of that. And that's also a market we want to tap into. We believe there's a lot of potential in high quality dates in the market, which is different from the dates currently being sold, which is only side dates from Iran, which are dominating everywhere, both in private label as well as other brands. So dates, dippies and fruit fusion are key focuses that I think we can carry fruit. And of course, than that, we are working on more new things, which is more confidential, which we are working on. Yeah.
Yeah.
But the dippies and dates and the fruit fusion, of course, everybody can see already.
Yeah.
And it's quite clear that we will keep working on strengthening that.
Yeah. So stay tuned for more updates later on.
Yeah, that's right.
And my last question, what do you see as the most important drivers from Dellia's business in 2026? Is the new relaunch or new products, or is it more listings, or to summarize the most important drivers here?
I think if we go back to the main pillars again, I always coming back to the 4 pillars our company are standing for. And I probably said this in your interview a few times, but it's all about the how to get this holistic relationship with farmers to grow together with the factory, to grow with capacity and technology, how that ending up with being taste and quality, which is giving us a large area of usage of the product in many situations, in many snacking situations, and then giving consumers option to choose new ways of snacking compared to traditional ways of snacking, which is potato chips, sweets, and chocolate, and just keep on being a good partner, delivering volume and innovation for retailers, and making the most profitable square meter in the store, and providing ongoing taste experience to consumers, who leads to product loyalty and repeat purchases. And just keep focusing on all these pillars simultaneously in Nordic, in Europe, and globally.
It has worked very well so far, and the products, it's very popular among a big group of people, from kids to us elderly, I nearly said. But Jan, thank you so much. Is there anything you want to add before we end the interview?
No, you have done a very comprehensive interview here, right, and into a lot of details. But I hope that I provided some flavor of how we work, and then we have to do our best, looking and improve ourselves, focusing and creating value for shareholders and ourselves, building this company going forward together.
Yeah. Thank you so much, Jan, for this.
Thank you very much.